Good morning and welcome everyone to today's meeting of the Audit Committee. I am Councillor Alan Alvey, Chairman of the Audit Committee. I would now like to hand over to Democratic Services to read the housekeeping note.
Please note this meeting is being broadcast live on the Council's website and on YouTube. It will remain available for a minimum of 12 months. Please use your microphone when speaking and remember to switch it off. Please switch any mobile devices to silent. If the fire alarm rings, please leave the room immediately and use the nearest fire exit. Do not use the lift. Please go to the fire assembly point in the car park. Thank you, Chairman.
Please would members introduce themselves during the meeting if I've not already done it. So apologies, please.
We have apologies from Councillors Malcolm Wade and Jackie England, Chairman.
Thank you. Can we please approve the minutes of the meeting held on the 21st of March and the 12th of May? Everybody happy? Thank you. Declarations of interest. Does any member have any interest to declare? No. Public participation. No public participants, although we have one member of the public present. Yes. Welcome. Right, we're now going to take items 10 and 11 out of order to let Ryan Stevens attend an urgent meeting. So item 10 is the annual fraud report for 24-25. Ryan, would you like to introduce this?
Thank you, Chair. So I'm Ryan Stevens, Service Manager for Revenues, Benefits and Customer Services. So this is an annual report which we provide to the Audit Committee to provide an update and summary of all the activities and outcomes in 24-25 relating to the prevention and detection of fraud. The report provides information about the range of activities undertaken, including participating in the National Fraud Initiative, joint working with the Department for Work and Pensions, where we had a successful prosecution this year, and the Housing Benefit Award Accuracy Initiative, where we exceeded our targets set by the DWP. We did review our anti-fraud policy and whistleblowing policies this year, as well as reviewing our web pages and online reporting forms, and we continue to review and maintain our fraud risk registers, which service managers do as part of their day-to-day functions. Happy to take any questions, Chair.
Thank you. Any member got any questions on this report? Yes, Councillor O'Sullivan.
In one part of there, you say there, when the National Fraud Initiative returned 1,862 data matches, and this resulted in £4,687. Seems a little amount for such a big database.
So I didn't quite hear the question. Was it?
Sorry, you've got data matches of 1,800, but you've only raised 4,600 from that. Seems a low amount for the amount of database.
We do get a lot of data matches which are potential issues and potential cases to investigate, so not all will lead to an outcome. We do have a period of time to review those 1,800, so that's, as at today's date, just under 5,000. We haven't completed the exercise yet, but what we do try and do is prioritise and target those where we think there may be a more risk and potential outcome of fraud. So we do try and focus resources to those particular areas.
Okay. Has anybody else got any questions on this item? Okay, well, the recommendation is that Audit Committee note the report, so I think we can take it, we've noted it. Thank you. Right, Ryan, agenda item 11, bad debts and write-offs.
Thank you, Chair. So again, this is an annual report to inform members of the total bad debts written off during the financial year 2024-2025. Debts have been written off for various services due to a number of reasons, which are highlighted in the report. And the report provides details of the amounts that we have written off in 24-25 for each of those services and figures for previous years for comparison. Say the debts written off in 24-25 do not necessarily relate solely to that year, as the arrears from previous years can take time to collect due to the timescales involved in pursuing recovery, for example, council tax. The report does provide details of the bad debt provisions, and just a particular note, we have reviewed the bad debt provision for business rates, where we have seen an increase in debts written off due to insolvency, which did account for 92% of the debts written off in 24-25 for business rates. Again, happy to take any questions, Chair. Thank you.
Okay, again, any member got any questions? Yes, I think there will be some questions on this
Just
item.
an observation, really. You've got the national non-domestic rates, and this year it's 100,000, last year it's 13,000. On the chart I've got in front of me on page 163.
Yeah, that's the category of debt, Ryan, where you list, and the national non-domestic rates has gone from 13,000 to 100,000.
So this is looking at the credits which we had on account. We have done some data cleansing this year, looking at some old accounts which were in credit. We have taken steps to try and find the relevant business so we can actually pay that money back. Where we haven't been able to do that, they are effectively written back on. I mean, should a business ever come back to us and review that, we can always provide that credit back to them. But that's just looking at some historical data which we've been reviewing over the last year.
Okay, I've got a question, which is on the Appendix 1 write-offs. And, you know, I know they're small percentages, but the numbers here are quite large. I mean, we've got, for example, a total write-off of 1.4 million in 24-25 and an arrears balance of 14 million. I mean, can you put some context onto these figures, because they're frightening, really?
Yes, as I said, so the amount written off, 1.4 million, that's not solely relating to amounts raised in that year, i.e. debts due in that year. Some of these are historic. As I said, it may take a while to go through the whole recovery process. That's exhausted, and then the debt is finally written off. I have mentioned about business rates. So we have seen a big increase in business rate debts being written off. So we've gone from 274,000 in the previous year to 553,000 last year, where we have seen an increase in solvency. Where a business is insolvent, there is little or nothing we can do about that, where there is no assets to clear any debts. And again, the figure you've talked about is the arrears balance at 14 million. Again, just under 6 million, that is council tax. We do have various means to recover these sums. We are as proactive as we can. I mean, we did raise 160 million pounds in that year, and again, that 5.9 million will include debts from previous years as well. So it's not solely relating to the amount raised in 24-25, i.e. 160 million. Some of these debts do refer to previous years as well, so they will always be added to as we had another amount of bills and amounts which do become due.
I mean, if you look at the previous year, the total arrears were 13,500,000, and they're now 14,500,000. So is this going to be an ever-increasing figure?
Oh, so each year you do, like, if I take council tax as an example, this year we're trying to collect another £170 million. We won't be collecting 100% of that, unfortunately. We'll be collecting a significantly higher proportion, but we won't be collecting 100%. There will always be some amount not collected in the year, which either becomes written off or carried over to the following year as we pursue the ongoing recovery of those amounts.
Okay, thank you. Anybody? Yes, Councillor Rackham.
Thank you. So Is there somewhere a record of how much has been spent before the debts are written off on trying to recover them? Because that would actually be quite a useful figure, I think, to be able to compare, because actually if you're spending a lot of money and then writing it off, that's an additional fee on top of what you're writing off. Does that make sense?
We have our overall budget, which is for the council tax and business rates for benefits. It's the overall budget for administering the whole service. It won't just be specifically on the recovery aspect. It will be on the day-to-day administration, updating, reviewing accounts, reviewing claims, dealing with customer contact, etc. So we don't have a specific amount or specific budgets for debt. We can apportion the overall expenditure, and we do incur costs on things like postage, paper, going to court, but then we can apply costs to any account where we go through that process to help support with reimbursing the cost effectively.
Okay, anybody else got any questions? I see appendix, where are we? Appendix 4 lists out the write-off authorisations. Is that changed at all, or is this just a repeat of what the existing authorisation levels?
Yeah, these were reviews last year, Chair, and updated, so there's no recommendation to change any of those limits this year.
Okay, thank you. Okay, well, we're asked to note the contents of this report. Happy to note, I guess.
Okay.
Try and recover some of this money. Okay, thank you very much, Ryan. Right, we now come back to agenda item 4, which is, I have to refresh my memory, right, this is Hampshire County Council, Daniel and, is it Daniel and Andrew? Yeah, okay, yeah, if you'd like to just run us through this, please.
Thank you, Chairman. Good morning, members. It's nice to see you all this morning. I'm Andrew Bowflower, I'm Head of Investments at Hampshire County Council, and here to present your Treasury Management Report as part of the service we provide, working with your own finance staff. So this report is our outturn report. It's part of the package of reports that we provide monitoring the Treasury service, this one looking back at all of the activity in the previous financial year. The most important thing for me to tell you this morning is that we've managed the Treasury management and the finances of the Council in compliance with the strategy that was set and the limits that were in place in that strategy. I won't focus on the economic background in the paper. I'll skip straight onto the activity for you, and just starting with the context that we're managing the Council's finances in support of the medium-term financial plan, which sees a decrease or forecast decrease in investment balances and an increase in borrowing to finance the Council's ongoing capital programme. So as set out in Table 14, the Council did take out some new Table 4, I beg your pardon. The Council did take out some new borrowing in the previous financial year, £13 million borrowed from another local authority on a short-term basis, which was the most efficient means that we found of managing the fluctuations in the Council's cash flows last year. As an illustration of those fluctuations, if we move on to look at investments, investment balances range from just under 30 million to over 80 million in the previous financial year. That money was invested in accordance with the investment strategy, as shown in Table 5. And then finally, members, I'll end looking at Table 6, which we feel comfortable shows that we're achieving a similar position to other authorities in terms of the output of managing the Council's money in terms of the security and the return we're getting on it, albeit that return is a bit constrained now that we're managing a smaller balance which needs to be kept much more liquid to meet the Council's ongoing obligations. So I'll stop there, Chairman, and happy to answer anyone's questions.
Thank you. Anybody? Yes, Councillor Sullivan's.
Can you explain the 13 million short-term borrowing? how that works? Is that internal? Is it external?
It
And the
is,
purpose?
so it is external borrowing, so it's actual cash that we borrowed from another local authority, basically because at the time we were forecasting that the council wouldn't have short-term cash available to meet the ongoing obligations we had, particularly in the capital programme, so we needed that money over that short-term period, and that was the most efficient.
How long's the short term?
So I think we borrowed for 9 months. So
Okay, thank you. Has the, I mean, you forecast the likelihood of interest rates and all the rest of it. Have you changed that view over the last 3 months?
so we generally rely on the advice we get from our advisors, and your advisors, Arlen Close, who have a much more resource and expertise looking at general economic patterns and the path of interest rates. They have changed their forecast recently, I think forecasting slightly less rate cuts and a slightly higher terminal rate that we get to by about the beginning of the next calendar year, I think, at around 3.75%. So
Right.
we are looking at a slightly higher, longer term,
So you're
medium
taking
term
a more
interest rate
cautious,
environment.
more cautious view on interest rate reductions.
Yes.
Okay. Okay, anybody? Oh, sorry, Kate. Councillor Grissom.
Thank you, Chair. I probably ought to know this, but I'm just wondering where the priorities lie. Who makes the final decision? I mean, there's obviously an awful lot of information that you give over. Do you make the final decision, or does New Forest District finance people make the decision of what you do? Or is it a cumulative thing?
The really unhelpful answer is it sort of depends on the final decision on what. So we have a very clear delegation policy in place with Paul and Alan, where we say effectively for day-to-day and short to medium-term investment decisions, my team will make those decisions in line with the limits that's agreed in your strategy and certain other parameters that Paul and Alan have agreed for us. For long-term investment decisions, which we typically aren't making in the current environment, but where we were, so for example, the decisions to invest in the pooled property fund that you currently hold, anything really long-term like that, we would do that in consultation with Paul and Alan, and similarly long-term borrowing as well.
Yes, Councillor Sullivan.
We've made one of our 4.1 million repayments on the public work bill, but have I read it right that we've borrowed 4.2 to pay for that? Therefore, that extends it another year.
So we haven't borrowed another 4.2, but part of the reason we needed the 13 million was because of that 4 million going out to repay that borrowing. So it's not been replaced like for like, but it's been replaced in part, if that makes sense.
All right. Slightly different.
And has it been replaced at a better interest rate?
No, but that was part of the reason for wanting to borrow short term, so we didn't lock into a higher rate of interest over the long term and maintain that flexibility.
Okay. Yes, Paul.
No, exactly. Yeah, just build on that. I mean, the £30 million short-term loan was fully consultative between the two parties, and we will now look to see what we do in the longer term with that, given the interest rates were high and they are decreasing, albeit at a slower rate by the sounds of things. It's trying to make sure we lock into the very long term at the most optimum rate. So on occasions you have to take short-term decisions to see out that. But it is, yeah, as you say, very cyclical, and whilst separate, there is a connection.
Okay. Yes, Councillor Adams.
Yes, Steve. I'm very interested in operational cash. You say at table 3 you haven't exclude operational cash. There's a formula for that? I presume there's an optimal range you have of cash in the system.
Sorry, I'm just trying to find the table you're referring
below
to.
it, you note item 3. You say this is the accounts are just to exclude operational cash. Are you taking, is it your formula at the moment to take more cash out of the system? Or, I don't know.
So that note is really just trying to reference back to the balance sheet. So operational cash is the accounting definition of how different types of cash, for want of a better description, are accounted for. So it's a relatively small amount that will just be in the council's bank current accounts on the balance sheet date, which we don't count for treasury purposes.
Usually there's a formula to say how much cash you need to operate.
Yes, so separately to that, so that not really anything to do with that. It's different ways of describing operational, sorry. So yes, when we're talking about our cash flow forecasting, the conversation about do we need to borrow or not, absolutely we would have a number in mind for what we think the council will need going forward, which is based on our cash flow forecasting.
Is there a formula? Is there an amount that you have in operational cash? Is that to operate?
It probably doesn't come down to a particular formula. It is more about the cash flow forecast for what we see coming forward.
I mean, we're constantly feeding information to Hampshire in terms of our capital programme, because timings may change in terms of acquisitions of significant properties and like. So it's an ongoing conversation, okay. And we obviously need to make sure we can maintain our working capital for day-to-day needs. I wonder,
well. Other authorities might say, well, you actually keep a certain percentage we need for operational cash. You don't have that. It seems more flexible.
It's probably more dynamic than that simplistic approach, yes. But yes. It's
there's no figure as such.
It's based on operational needs at the time.
Okay, thank you. Anybody else? Yes, Caroline Rackham.
Thank you. So in terms of the short-term borrowing, how long is short-term? Because with devolution coming up, I wonder what the impact of that is on both the long-term and the short-term borrowing.
So short-term in this sense is the accounting definition, which is less than a year.
And what's the impact then on whether the amounts that we're short-term borrowing and long-term borrowing in terms of devolution coming around the corner?
I'm not sure there is one in the short term, for want of a better word, because what we're trying to do is make the best decisions for the county council. Sorry, beg your pardon, that's a slip of the tongue, for the council. The best decisions at the time. I think once we have a clear outcome of what even local government reorganisation looks like, we might have conversations with Paul and Alan if there were decisions that were going to impact beyond that time scale. But I'm still not sure it would necessarily change anything, because it would still be about what's the most sensible decision for the mandate we've got at the moment in terms of managing the council's financial position.
I would agree. I mean, we're making the best decisions for us, whether we are NFDC or whatever we may become. So it's normal financial prudency and sensibilities will prevail. The short-term borrowing will come to an end this summer, so we will need to consider our position there and either reborrow again in the short term or look to lock in some more secure longer term finances, which will need to be taken into the round as LGR, as the authorities come together, which we don't know yet, whatever group of authorities come together to form the new unitaries.
Yeah, go on, yeah.
So in terms of the long-term borrowing then, does that just get passed on to whatever authority and they continue to have it as a debt ongoing?
Simplistically, yes. There will be more complicated conversations with somebody, say like Hampshire, who need to share their finances across a number of unitaries that get formed. But from our position, if we move as one into a new unitary, we bring with us our current position at that time. And we have a number of loans already that are decades of maturity, so they will not be resolved before LGR.
I mean, as I understand it, this is all going to be part of the negotiations from forming a unitary authority, and every authority is going to have their own, borrowings and the part of the negotiations will be as to how that is all going to be put together. But that's going to happen once the decision is made as to how we're going to form the unitaries, which is going to be after the government looks at our, proposals, and the decision is made in, is it spring next year, I think. So I think that's the sort of time frame.
Yeah, so that makes, I would have thought short-term borrowing a bit more appealing. Long-term borrowing a bit more appealing.
A bit more appealing. Well,
in that we're then dealing with the finances as we have them now to know exactly what we can do and what we can't do.
Yeah, well, it's a good point. It would depend on the interest rate, I guess. If you can borrow short-term at a lower interest rate than you can on a long-term, I don't know. But this is where advice from our Hampshire County Council advisors and everything on interest rates will be important. Anyway, okay, I think we've discussed that enough. Anybody else got anything on this? I think we are going back here. We're asked to, I think, just note this, are we? Oh, we have to approve it, right, okay. And note the activity. Everybody happy to approve this? Okay, thank you. So we now come to item 5, external audit plan, which is Simon and Katie.
Just Simon today. Thank you, Chair. Good morning, everyone.
Good morning.
The report that you have in front of you, which starts on page 31 of your papers, is our plan for the 24-25 audit. So the work we will do to be able to give an opinion on your financial statements and to report on value for money arrangements. We've now fully completed our 24-25 planning procedures, so the plan you see is a complete reflection of what we will do. The context for the audit continues to be the national reset arrangements to address the audit backlog. That's something we've talked about extensively before. We explain that in the context section of the plan on page 35 of your papers. We're now in the recovery period and we will conduct a full programme of work. So the work that we do will be what we would ordinarily do on an audit. However, because we didn't get full assurance last year, and particularly in relation to reserves, it is likely that the opinion will be modified or disclaimed again in 24-25. That's in line with the National Audit Office guidance, which expects full recovery by the 26-27 year. There is a statutory backstop date again, by which we must complete our work. That's the 27th of February next year. We actually plan, and you can see the timeline on page 61 of your papers, to have completed our work by December this calendar year. So one good thing about the recovery now is we are more in the right time scale, so that is coming back. Risks for the financial statement audit are summarised on page 37 and 38 of your papers, and I'll just briefly walk you through those. So the first of those risks is the presumed risk of management override of controls, effectively. So this isn't something that's specific to the council. This is something that auditing standards say we must presume on every audit engagement. So we must assume that management will perpetrate financial reporting fraud and seek to report financial position or performance more favourably. So what do we do to address that? Well, we look at those parts of the statements that are more susceptible to manipulation. So the things that are estimates, the things that are judgmental, the things that are more subjective, and focus our work in that area. We also do a lot of testing of what's called journals. So journals are used to move around balances on your financial ledger, and again, can show if manipulation is going on. So we focus work on those areas and any significant unusual transactions. The other fraud risk that we raise is the risk around the inappropriate capitalisation of revenue expenditure. Why do we do that? Well, in local government, as everybody in the room knows, there is significant pressure on revenue budgets. However, there are capital financing sources that can only be used to support capital spending. So there is incentive for management to charge revenue expenditure inappropriately to those capital financing sources. So we do work to look at that effectively and make sure that's not going on. What do? We look at your capital additions. So we look at your property, plant and equipment additions, investment property additions, and seek to gain assurance they are actually capital items. The next significant risk is the implementation of IFRS 16. So IFRS 16 is a new accounting standard applicable for the first time in local government this year. What does it do at a level? Well, it requires council, requires bodies where they are lessee to look at their arrangements where they would have been under operating leases, and therefore there would have been a revenue charge for the use of assets. And largely, those operating leases would be reclassified as right-of-use assets and actually reflected on the balance sheet. There's a lot of work to prepare for this, so there's a lot of work to go through all of your contractual and lease type arrangements to identify operating leases that are within the scope of IFRS 16 and therefore should be recognised on the balance sheet. A significant risk because we didn't feel at the end of last year the council had made much progress in relation to that. So this is something that we think is a significant risk here. Moving on to inherent risks. So the first is valuation of property, plant and equipment and investment property at existing use value and fair value. So evaluation is an estimate. It's subjective. It's informed by assumptions, and therefore there is the high scope for error. So what do we do to get assurance there? We effectively challenge those assumptions and test inputs to the valuation. Valuation of council dwellings. Different valuation basis, it's existing use value, social housing, but the same reason that we consider it to be a risk, effectively an accounting estimate informed by the work of a specialist, so the council's valuer. We need to do work to challenge the assumptions and test the inputs to that process. The final thing in terms of risk is pension liability valuation, or asset valuation now. So you reflect a pension liability or asset on your balance sheet. That is an actuarial valuation of that liability or asset, again informed by the work of a specialist, again based on assumptions, so we need to do work to challenge that because there is a higher risk of error. Just to touch on materiality, so materiality is set out on page 39 of the papers, so our overall or planning materiality level is approximately 2.6 million. If we find errors higher than that and they're not corrected, we would qualify or modify our audit report. Performance materiality, so that's the level we use to undertake our procedures, is broadly 2 million, just below 2 million. And then our audit difference threshold is 130,000. 130,000, if we identify errors over that level and management declines to adjust for them, we bring them to your attention and you determine whether you're satisfied with the explanation for not adjusting. Our VFM risk assessment starts on page 49 of papers. We're fully through our VFM planning and we set out in the report what we look at to inform that. We've not identified any risks of significant weaknesses in the council's arrangements. One other change on VFM this year, so our auditor's annual report where we give you the full commentary on what we've done. Under the new National Audit Office Code of Audit Practice, we need to give you that by the end of this November. So you can expect to receive that report then, which is earlier than it used to be. I think I'll stop there, but very happy to take any questions.
Okay. Anybody? I've got a couple. Alan?
The first one is the valuation of properties. How is the valuation done? Because normally, domestic, you would get 3 valuations to get an average valuation. So do we do a similar thing, or do you as auditors and us as NFDC agree with the same valuers?
So the council doesn't get 3 valuations, but it employs a specialist valuer to do the valuation of all of its property. The basis for the valuation is different depending on the type of property. So for operational property and plant equipment, like this council building, for example, that's considered to be specialised. It's valued at depreciated replacement cost. So what would it cost to rebuild it if it was destroyed tomorrow? For property, plant and equipment, or other items where there's considered to be an active market, it's either valued at existing use value or fair value. So Some of your PPE is at existing use value, your investment property is at fair value. That's more a market-based valuation, so the value will look at comparable information and determine what you would likely get in a market transaction. So it's different depending on the different type of property. You only get one valuation. What do we do to test it? We perform the work of the valuer. So we look at the assumptions they've used, we look at publicly available information, and we challenge the valuer on those assumptions. Very simple to inform valuation. So things like floor areas, for example, we test the accuracy of those inputs. So the factual stuff that goes off to the valuer to allow to do evaluation, we test to see whether it's right and supportable or not.
Okay, can I just do a follow-on?
Yeah.
For an example that we have, which is an industrial site at in Ringwood, where the business units are not fully let at the moment, but obviously have a value. How would you address that as on the balance sheet? I mean, you've got a cost of what it costs to produce all the units, and then some of the units are now let, producing an income, but they're not all let. How would you come up with the value of that?
So
You put your mic on, it's fine.
apologies, Andy. So ordinarily in that situation, you would consider the yield. So you would consider the future income stream. If those properties are not currently let, they would be void, and you'd assume a void period in the yield. So it would be adjusted for like that in the valuation.
Right. Okay. Okay. Thank you. Yes, Councillor Southern.
I'm not quite sure the IFRS 16 thing, how that works. You're saying it's capital now, and if it's capital, does that go into the capital budget rather than the revenue?
So where the authority, in many instances where the authority would have leased assets under an operating lease, and that would be a revenue charge, the asset wouldn't be recognised on the balance sheet. The asset under IFRS 16 will be a right of use asset and will be brought on to the authority's balance sheet. And yes, it would need to be financed through capital financing sources rather than revenue.
Okay. One other point, on page 53 of our pack, which is 23 of your report, materiality, you ask that we confirm our understanding of an agreement to these figures. Was that just slipped in, or you want us to formally acknowledge those?
So the committee is the body charged with governance for the council. You need to be satisfied that you are content with our materiality figures. There is nothing unusual about materiality here. So we base our materiality on the expenditure of the council, because we think that's what matters to people. That's what people are interested in. The planning materiality is 2% of the gross revenue expenditure of the council. Our performance materiality is 75% of the planning materiality. If there was a history of a higher level of error here, it would be lower. It would be at 50%. The audit differences threshold is 5% of our planning materiality. Again, that's kind of standard practice for us and standard practice across the profession. Okay. So there's nothing... Nothing unusual at all here to explain. Yeah.
Okay, well, can I take it that we're all happy to confirm our understanding of this? Okay, good. Right, anyone got any other questions for KPMG? No? Okay, well, thank you very much.
EY Chair, thank you.
Sorry?
EY, not KPMG.
Oh, EY, I apologise, I grovel.
There's no need for that, Chair. Thank you very much. Thank you.
Okay, thank you very much. Right. So we move on to item 6, which is internal audit. Anthony, over to you.
Thank you, Chair. Good morning, members. So I'm pleased to provide for you today my annual internal audit conclusion report for 2024-25. Obviously, I'll take the report as read, but I will highlight a few areas. So firstly, my opinion is provided in section 9 of the report on page 85 of your agenda pack, in that I'm satisfied that sufficient work has been taken in order for me to form a conclusion on the adequacy and effectiveness of your internal control environment. And in my opinion, the frameworks of governance, risk management and control are reasonable, and testing has demonstrated that controls are working in practice. And as always, where issues are identified, we work with the management team to agree appropriate and corrective actions to address the issues identified. Now, in forming my opinion, I have to take account all of the work that's been undertaken within the year, which is reflected on page 86 of your agenda pack. And I'm pleased to say there were 10 reviews that concluded with a substantial assurance opinion. There were 12 reviews that concluded with a reasonable assurance, and just 4 reviews where limited assurance was provided, and very positively, no areas where we weren't able to provide any assurance whatsoever. Now, moving on to pages 87 onwards, what we tried to do is draw out key strategic governance themes and issues, and obviously in and around risk management and control. So starting with the key strategic governance issues, I think it's really positive with the work undertaken. There are some areas that were concluded with substantial assurance or reasonable assurance, and I think really based upon the areas that we have done, so in and around information governance, in and around the Council's fraud framework, in and around the adoption of the new reporting formats for the committees and whatnot. I think that really the governance arrangements at a sort of strategic level are really robust and fit for purpose and subject to regular review. And for those areas that it's appropriate for the committee to receive reports on, then obviously we can see for our participation in the committee that you've, for example, approved the Treasury Management Strategy, lots of your fraud policies and etc. Now, with regards to risk management, obviously we did provide a limited assurance review within the year that was previously discussed at length by the committee in earlier meetings. Obviously, where we're looking at the year as a whole, I have to reflect back on that and obviously draw that out within the conclusion. But I'm pleased to note that all of the relevant actions that have arisen from that review have now been implemented, bar 2 that are no longer applicable, that we can probably talk about on the next paper. With regards to control, again, based upon the work undertaken, in most areas, the frameworks of control are robust and fit for purpose. But obviously, one of the purposes of internal audit is to identify areas for improvement. And as well as the risk management area, there were 3 other areas where we concluded with a limited assurance opinion, and we provided a summary of what some of those salient issues were coming out of those areas. We do take other sources of assurance into account when forming our opinion. So obviously we've looked at quite heavily the feedback from the Corporate Repair Challenge that was undertaken during the year. Just some other bits just to note. I don't think there's any areas where the Council have taken risks that we feel fall outside of the risk tolerance or risk appetite along with the risk management strategy. One of the new requirements under the new standards is to try and identify themes which, when you take all of the work as a whole, might indicate that there are underlying issues that could sort of obviously become a bit more of a problem. And I think based upon the work under the year, where we have identified areas, it's quite often been in and around the updating and documentation of operational procedures and policies, which, given the uncertain climate we're at and the risk of knowledge walking out of the door, then it's even more important that those areas are identified and redressed to sort of give you that resilience. We touched briefly on anti-fraud and corruption, but I won't go into detail there, given Ryan's report earlier. So just finally, some of the other areas, just to note that there have been no limitations of scope that I need to bring to your attention. There have been no impairments that I need to bring to your attention. No non-conformance with any of the standards that I need to bring to your attention. So again, it's all sort of positive in those areas. So finally, provided on page 94 of your agenda pack is our performance for the year. So we have a target to deliver 95% of audit reviews through to at least draft report stage. Unfortunately, where full reviews didn't quite make it for different reasons, it put us at about 87%, but that is a significant improvement from our position last year. We were above all of our targets for our feedback from our customer surveys, and it's really good to note that it was 98% across all partners, but actually when you take New Forest in isolation, it comes out at 99%. So just finally, from our perspective, as always, it takes two to tango. We can't do audit in isolation, and we really can't do our work without the support, both from yourselves as a committee and also from the management team and officers who facilitate our reviews. So I'd like to formally pass on those thanks. I will pause there, Chairman, so I'm sure there may be some questions.
Okay, thank you very much. Councillor Grisell.
Sorry if I've missed it, because I must admit I was starting to nod off last night. But page 89, you mentioned about the partnership between the towns and parishes, and there's no central register. How will that go forward? Will there be a register? Who's going to be running that?
This was with particular regard to a lot of those operational sort of open spaces type services that are provided. Where the report is currently at draft, obviously we're awaiting the management responses for how they propose to take those particular issues forward. So as and when we've got the resolution, we can bring that back to the committee for a fuller update. I think from our perspective, where a lot of those arrangements aren't formalised and there aren't sort of particular schedules that we could look to that sort of confirm exactly what is provided and when, obviously from our perspective, looking at the council, there is a risk that you could be providing too much or not enough, and then obviously not recovering the costs if you're providing more services than you're actually recouping. So I think that was what the particular emphasis was on that, not on the wider relationships that you have with the town and parish councils. So it was focusing purely on those sort of open spaces type areas, which was the focus of that review.
So are you saying that you would recommend to a town that they had too many places or not enough places? If you do.
I think what I would expect to see is that there was full clarity over exactly what services were being provided, and then there were full schedules to demonstrate exactly what was being provided, so then we could evaluate the performance against those. I think where some of those arrangements haven't been formalised, then it kind of could leave you exposed to risk that, again, there's challenge, that there's an expectation that more is going to be delivered from one side to the other. So I think it's really important in those areas that everything is formally formalised so you can assess them against them.
Thank you.
And we're just picking up on that a bit further. I'm not clear, do different towns and parishes have different service level agreements, so there's no standardisation of service level agreement?
No, it's exactly that. So you would expect that every arrangement you have with each body is formally documented and formalised.
But they're not standardised in any way. So,
no.
I mean, so for example, I come from Forley, so a service level agreement we have on, I don't know, on dog bins or whatever, will be different to a service level agreement that some other parish or town council will have.
Absolutely, which is why it's then important to have
Doesn't
those
sound
arrangements
very
formalised.
efficient.
And again, all arrangements are going to be different. And obviously with some of these areas, if for example with the maintenance and inspection of park benches, if suddenly one of the town and parish councils doubles the size of park benches, then clearly that needs to be formalised in an arrangement, so there isn't the expectation that everything is going to be covered. So.
Right, okay, thank you. Anybody? Yes, Caroline.
I'm sure you've got this in here, but I'm not sure about it. So on page 94, with the percentage of internal audit plans that have been delivered. So why have those 4 that haven't been delivered not been delivered?
Yep, that's a fair challenge. And so those 4 particular reviews are noted as a footnote on page 97 of your agenda pack. So as previously reported to the committee, we had intended to undertake a review of the corporate plan and performance management. At the request of the management team of the council, that was deferred until the outcomes of the peer review were known, so that could all factor into what the arrangements were going forward. So I think it was a case of timing that once the outcomes of that peer review were known and the resources were available to deliver that piece of work, it hadn't sufficiently concluded in time to inform my opinion for this year. So that will carry forward to next year and will be included and reported accordingly. So the work's not scrapped, it will be delivered, it just wasn't possible to deliver that work within the timescales that we originally intended, because obviously the management team wanted that review deferred. In the terms of treasury management, again, the start date of that review was requested to be deferred slightly, and then latterly, for whatever reason, the resources weren't quite there on our side just to get the work delivered in time. That work is now substantially complete and we're going to be reporting on it in the next couple of weeks, but it obviously doesn't then feature in time for this annual conclusion, but again, it will come forward to future years. Very similar with licensing, that was requested to be deferred by the management team. They are committed to that review. It will be reported accordingly. With regards to the firewall management and monitoring, I think we'll take that one on the hit. That the resources that we had available to do that review unfortunately left the partnership. It isn't a tap we can turn on, it is specialist resource, so again we're committed to delivering that review. It was just the window we had to deliver that work. Unfortunately, the person who's going to deliver that work is no longer with us, so it wasn't there to do it. So it's a mixture of reasons. But with all of these things, obviously, in an ideal world, it would be 100%. But life is such that things don't quite always go according to plan. But with all of these reviews, it will then contribute towards next year. The work isn't going to be lost. It just didn't mean it could be delivered within the time frames to come into this report.
No, I mean, there's personnel issues involved.
Of course, there is.
So the treasury management disparity, that was also deferred due to peer review?
No, not because of the peer review, just because of the pressures on the team at the time that they wanted to stay our side. It just didn't quite make the line.
Paul would like to just comment on that.
Thank you. And I think it's fair to say, Anthony, we're also going to strengthen the governance of those changes and requests. So EMT now are getting informed when people wish to change dates. So there's greater oversight and consistency of the reasons why they may get deferred and not just deferred for convenience. So we're strengthening the ability to oversee why we're doing things, and therefore hopefully that should improve delivery rates as well.
If I may also add to that as well, with the new standards coming in from the 1st of April, there's a requirement for a lot greater transparency in those things. So within our progress reports previously, any reviews that were requested to be specifically deferred and moved to a different year, we've always transparently reported. But I think there will be a great deal more transparency now over in-year changes and requests as well.
Okay, anybody else? I mean, you're going to go through, next item is your further report. So we're just asked to note this. So I take it we've noted it. Okay, thank you. So we move on to item 7, Anthony, which is the progress update of outstanding management actions.
Thank you, Chair. So from previous committees, quite rightly, yourselves as the body charged with governance have wanted a full explanation from council officers as to why some of those actions hadn't been completed within the timescales originally agreed. So what we've done is worked with the management team to go through all of those overdue actions as previously reported to ascertain what the current situation is with those actions. So of the 24 actions that were previously reported as overdue to the committee, we've now had confirmation that 3 have been fully completed and implemented, which is great news. 11 of those actions, as originally agreed, are still relevant, are still going to be implemented, and revised timescales for implementation have been provided. Of the remaining 10 actions, the management team, and I will reiterate, it's their decision, not ours, 10 of those actions will not be taken forward as originally agreed and will therefore not be tracked through to completion if the committee feel that that's the right approach. Of those 10 actions, it sort of falls into 3 camps. There is one where the council's management team feel that alternative action has been taken that has addressed the issues. So, yeah, the original action as it was originally agreed. Whenever it was agreed, different things have been taken to address the risks. There are 3 that have become superseded. 2 in relation to the risk management policy, where a different course of action was taken, so the original agreed action would never be implemented because it was in and around sort of alignment with the risk management policy, and where there was a change to the principal risk register from the previous strategic risk register, the actions as stated couldn't be agreed because of that change of approach. And there was one where at the time your spend in a particular area meant that you should sort of had a contract. The activity in that area has decreased, you no longer need a contract, and if there is a future requirement, it would just be picked up within your normal sort of standard procurement arrangements. Of the remaining 6, they very much fall into 2 camps, where the original agreed action, the issues are still there, but where there's now alternative arrangements in place, and those reviews are in the 25-26 audit plan as agreed by yourselves back in March. Those issues, those areas, and if appropriate, if there are still issues to be identified in those areas, they will be re-evaluated in line with your new arrangements that you have in place. So, for example, with business continuity, the actions that were originally stated couldn't be taken forward as they were originally stated. You now have new arrangements in place with, I think, Southampton and Portsmouth City Council to provide that service, so the areas will be re-evaluated afresh, and if there are still issues to be addressed, that will be re-evaluated in line with your new arrangements rather than the old ones.
Okay, thank you. There's an awful lot of red. Does this is just, it's not, do you have any concerns about any of these items that you want to draw our attention to?
I think with internal audit, all of the areas are there to obviously drive improvement. And if weaknesses and issues were originally identified that haven't been addressed, those issues potentially are still there. So, of course, those concerns still remain. So in terms of business continuity, you would expect that everything is fully documented. At the moment, potentially, those things haven't been addressed, but they will be addressed in the under the new arrangements.
That is actually covered under the risk section that's going to come up later in this agenda. So we will be discussing that. Has anyone got any? Yes, Caroline.
So just to drill down a bit further, what is the reasoning behind stopping tracking? Is it just officer time, or?
No, it's just the action as stated won't ever be implemented as it was originally stated because different actions will now be taken. So you can't track and confirm something has been done when something different is going to be done.
So does that include not tracking the replacement action then? Is that?
No, when those audits have been completed, if the issues are still there, then new actions will be agreed that's now in line with the new arrangements.
So you are going to kind of reassess whether the new actions are going to work, really?
If applicable, hopefully, under the new arrangements, the issues have already been addressed and there'll be nothing to track. But again, we'll be reporting that back once that piece of work's been undertaken.
I mean, my understanding on that, Caroline, is that these will then appear in the 25-26 audit plan, and you will be reporting, and we can see whether, in fact, the new way of doing it has addressed those issues.
Absolutely, yeah.
Okay. Yeah. Okay. So they're not being hidden; they're being readdressed. Right. Did I see Paul put your...
Yeah, I was just going to add, I think it's a really useful exercise to kind of reset what is achievable and possible based on the new reality. So it was, thanks to Anthony's team for taking the time to revisit everything with our colleagues. And some of the ones that I read are just genuinely been superseded by events. So to reassure committee members rather, we are still tracking the ones we need to track. And there are still plans in place to review areas as part of the ongoing audit plan.
Paul finish and then... Okay, Councillor Adams.
Yeah, I must say, to be honest with you, I find that the generalisation you gave, but I would have liked myself to have to talk about each of these, the red ones, individually to see to have the facts. And I've got to say, for example, the one there, audit, business continuity, MA, you say now, emergency planning officer is starting on the 23rd of June, so it's going to be soon. So that would possibly go from red to an amber, for example. I mean, that's a sort of example we could look at that. It's sort of saying that there's no officer there. One is starting soon. One would presume that's still correct. So therefore it would go from red to amber.
If I may, just to reiterate, that is the New Forest District Council's officers and explanations as to why those actions haven't been implemented and what they propose to do about it. So I think if you wish to have more information, it needs to be council officers who explain that position, because that's obviously their assessment of those actions. It's not us stating it for them.
Okay, well, perhaps Paul...
So could you just clarify which one you're referring to there?
Well, it's here under business continuity audit MA. There's no number here, is there, as such? On page 111, anyway.
111.
But
apologies, yeah. So an audit is planned throughout this next financial year. So it's really a case of when this was requested for 23-24, so we're resetting the position, so it will happen. We're restarting it.
Yeah, it's just when I've seen these things before, we talk about them individually, and then we know we're with you. The generalisation we can understand, but it's just this is one. It looked to me as though there's the action of the emergency planning officer is in place, so that would possibly would be subject to coming down from red to amber. I mean. It's
I think because there's a new arrangement with Southampton, it's almost resetting with the new arrangement. So it's a bit of a stop-start rather than an evolution of what was there before. But more generally, I would state to the committee, now they have been reset, all those continuing ones. I would be disappointed with colleagues if we weren't able to conclude these as intended, given the opportunity that was presented to people.
Okay, I'm just thinking, some of the red are superseded and have gone, and some are down as to be reassessed, and it says stop tracking. In your next report, can you include a statement against those ones that the reassess, what has happened, so that we know they've just not been parked in the long grass, but that something has actually been done? Is that possible? Not the ones where it says superseded, but the ones that just says to be reassessed.
So again, the audit of business continuity, emergency planning, and I think there was another one as well, the transformation. Those audits are in the agreed audit plan. Okay. That was approved by yourselves. The timing of those reviews was agreed by yourselves back in March. As and when those reviews have been completed, the work has been undertaken within the timescales that were agreed back in March. We can then provide that update Whether or not those reviews will be completely completed by the time of the next committee, I'd have to have a look back at what the schedule for those reviews were going to be. But, you know, we're not going to lose sight of them. It's just something different is likely to be done. I think with the transformation ones in particular, what was originally agreed and what was going to be put in place predated the announcements on local government reorganisation and LGR. Some of those things will be re-evaluated and perhaps not taken forward, but that will be concluded under that review.
Okay. Right, anyone else, any questions or comments? Right, I think the recommendation is on page 99, which is to provide input to and note the reassessment. I think have we provided sufficient input? Okay. We agree? Happy? Okay, thank you. Right, item 8, which is Code of Good Governance Review. This is the annual report of the Monitoring Officer and Chief Finance Officer. So Matt is here. So Matt is going to run us through this, I think.
Yes, thank you, Chairman. So as you said, this is an annual report where the Monitoring Officer and Chief Finance Officer do a good governance review and present their findings to the committee. You'll see in the report in section 3 the framework and those 7 core principles that assessment is undertaken against, and then through to appendix 1 where that detailed narrative outlines the assessment against each of those criteria. So it's the view of myself as Monitoring Officer and Alan Bethune as Chief Finance Officer that the Council is able to have confidence in the effectiveness of its governance arrangements, illustrated throughout the report. I would highlight as well, given that the period of 24-25 covered the tenure of the previous Monitoring Officer, this activity was undertaken by the three of us together, so a comprehensive look. If I can also then move on to draw attention to Appendix 2, which highlights the progress against the actions that were identified in last year's review, and a number of those have been completed, and the one that is not fully completed is carried forward then into Appendix 3 as a new action arising, alongside some other matters that have been identified to take forward. So reporting arrangements in respect of council-owned companies, with the new focus on local government reorganisation, ensuring that our governance arrangements internally reflect that process and are able to respond to the council's needs there. Embedding the new principal risk register following its adoption, so the adoption came last year, and making sure that really works for the authority. And as I mentioned, last year improved budget information was not fully completed, so carrying that forward through into this review. So a comprehensive document, Chairman, but happy to answer any questions. The recommendation is for the committee to note the assessment that's been undertaken.
Okay, thank you. Councillor Grisell.
Thank you, Chair. On page 133, it discusses the fact that the budget holders aren't trained up to use the system. Is that because the system's not ready, or is it because the training's not been had available? Anybody?
Everyone's looking at each other.
I think there's been a long-standing ambition to get better information to colleagues in terms of like a dashboard format, and that hasn't materialised. So at the moment, information is given via standard reports to colleagues, and we're obviously constantly looking to improve people's understanding and use of that data. So that's where the actions rolled forward again to next year, because that's the main ambition. And you know, in light of LGR, unfortunately, we need to assess how much we commit resource-wise to achieving that in the next couple of years.
Yes, Councillor Sullivan.
The budget holders, have they got universal software to be able to keep their budgets up to date, that portfolio holders can get information from, because that's what I'm implying from there that they're not getting.
I think Paul might want to comment, but I think that it's generally speaking to the response Paul gave last time. It's recognised that as a council we have a financial system, but actually the maturity of different levels of officers understanding, knowledge and experience of using that to the absolute best of its ability still has some way to go. So it's understanding how we can best equip the organisation to use the systems we've got to get accurate information out of it and use it. So that's why it's being carried forward, because I think there's still some work to do on that. But Paul?
No, exactly. I mean, different people work differently, and what's available at the moment does provide the information, but having a greater scope for people to engage with it and utilise it would be beneficial.
Okay. Yeah.
I just see something here, reporting on the report you've given. On page 133, you're saying, you're criticising actually that self-serve for up-to-date financial information can still be improved or is not sufficiently moved forward during 24-25. Is that in a better state now?
I think that's recognising that the conversation we've just been having was that it was an action last year to take forward this improved budget information. Some work's been done on that, but actually not to the sufficient level to remove it from the action plan. So we want to see some more progress this year, but taking into Paul's comments on local government reorganisation, there's an assessment as to how far we go, but recognising more work to be done.
So it's noted, I suppose, and it's in the report. That's all one can do. Yeah.
Okay. I mean, one comment I'm going to make on the actions arising, which is on page 134, which is embedding the new principal risk register. When we come to that item on the agenda, I'm going to have some comments which I would like to be addressed before it goes to Cabinet for embedment, I guess. I mean, the March 2026. I mean, what does that? What's going to happen by March 2026 when it says embedding it?
I think that's just recognising that it's taking the financial year ahead to ensure that this new procedure that's being adopted is fully embedded properly. It's okay. Just reflecting that when we take stock next year that's happened.
Okay. Right. Anybody else got any comments they want noting? No, we'll move on. Thank you very much. So moving on then, Matt, to item 9 on the agenda, draft annual government statement.
Yep, thank you, Chairman. So this really flows on from the previous reports. So having undertaken that Code of Good Governance review, the Council is then required to produce an annual governance statement following that assessment that's taken place. So the recommendation is for the Audit Committee to approve the draft. It does remain live until the point in which it's finally submitted. You'll see the same governance framework and those 7 core principles repeated in this document as to that assessment, but it's, I suppose, a more comprehensive overview of the Council's governance arrangements and what's taken place over the last year, and a repetition of those actions we want to take forward. But again, happy to answer any questions.
Right, thank you. So we're going to have to approve this. Has anyone got any comments they want to make? No? Okay, so can I take it we approve it? Agreed? Okay, thank you, Matt. Right, we now come to, we've done 10 and 11, so we now come to item 12 on the agenda, which is Paul.
Thank you, Chair. The report you have in front of you sets out the key financial statements for the 2024-25 financial year, hopefully in a format that is familiar to the committee. These are draft figures and will now be subject to the external audit process covered earlier as part of today's agenda by Simon. There are some changes to accounting policies laid out in the report and in detail within the appendices. These cover depreciation, PPE and leases, and members are asked to approve those changes to accounting policies. The full statements are due to be published at the end of June, and we're on track to publish these on Monday. And following this meeting, Chair, I'd appreciate the ability to obtain a signature for you in that regard. So I'll pause it there. And any questions? Thank you.
Okay. Just one, I have one, which we are asked to approve the changes to accounting policies. Is there anything there that we should be concerned about, or is this very standard and legal requirement?
Very standard and necessary. The depreciation one is a new classification due to the beach shelters we've put in place. And as referenced earlier, IFRS 16 is coming into force, so that's a significant change. So, yeah.
So we don't really have any option but to...
I would prefer you to approve them, yes. But
okay, thank you. Right, anyone got any questions? Sorry, John.
Just one, the lease expenditure, is that what we were talking about earlier? That's come in now?
That's correct, yes.
Okay, thank you. So we note it and we approve the changes to the accounting policies. Okay, thank you. Right, item 13, procurement contract standing orders. Again, this is Paul and Josie. Yeah?
In Josie's absence, I'll lead on this one, thank you. The report provides the committee with an update on breaches and waivers in the year, with comparisons given where possible. Full details regarding each of those is then given in the appendices. It's worth noting that waivers are a tool that can be used by the council in valid circumstances, whereas we always seek to avoid breaches where possible. Also within the report, you'll see that we are proactively reviewing financial arrangements, and as we uncover situations in need of attention, we are making immediate action where possible. And one aspect we are conscious of is, and we will remind budget holders, is the risk to unanticipated cumulative increases with a single supplier, which can often mean situations arise by stealth rather than by deliberate design. So yeah, happy to take any questions.
Okay, it highlights some interesting contracts. Like, for example, one there I see on, what was it, on bat, horseshoe bat study. Yes, Janet.
Councillor Richards. There were a lot of breaches and they were quite significant sums of money. So I was wondering, can we expect next year to see no breaches?
I would love to be able to give complete assurance there'll be no breaches, but we are definitely working towards resolving those we're aware of, and as I say, explaining to colleagues the risk of how they could occur unintentional step by stealth, really. A number of these with a single supplier that's grown over a period of time, and therefore we just need to be mindful that tenders should be undertaken if we have that level of expenditure planned or potentially planned.
Yeah, I think you're always going to get... I mean, I think I'm pleased that these are being picked up, I suppose. We should look at it from that point of view, that someone is going through and identifying these breaches and where waivers are required. So I think I'm grateful for that. Has anyone got any questions or comments on any of these? I think they all seemed, Sorry, yes, Councillor Simon.
It's more an understanding. So these are extra expenses. So, for instance, like in the New Milton, they've got 2 pigeons on the roof, which is delayed.
Sorry, Councillor. Councillor, I can't quite hear. Can you...
Okay, sorry. So, for instance, in New Milton, they've got 2 pigeons on the roof which have delayed any work that's been done. Does that get counted in that loss of money because you're not doing anything for 5 months or whatever it is?
I may have to defer and take that one away, I'm afraid. Happy to pick up a detailed conversation offline, but yeah, I'm not sure I'm able to answer that today, I'm afraid.
I'm not sure that's what are you saying? Is that a breach? Yeah. I think this is something that should be covered by contingencies in any contract situation. It's not really a breach. Anyway, I think a detailed discussion perhaps out with this meeting. Pigeons, but as bad as bats. So. Right, anybody else got anything to say on this item? Okay, so I think we just have to note it, is that? Yeah, just to note, okay, everybody happy? Noted. Right, item 14, principal risk register, which is Paul again.
Again, Chair, yes.
You're busy.
Absolutely. So, James Clark would have previously presented this to yourself. He's just he's left the organisation, and we're in the process of recruiting a new risk and insurance officer. So, in the absence of that, I will take the lead on this one. And this is the latest update of the Council's Principal Risk Register, as reviewed by E&T and as informed by a quarterly review of all service risk registers across the Council, 31 in total. As explained in the report, 2 risks have been removed. The first regarding Hampshire County Council and the political environment. This is due to the delay to the elections that were due this year, but because of LGR they've been postponed by 12 months. So we're still mindful that that may reoccur in future. And the second is due to the completion of the Hardley depot, so that's no longer being taken forward. A new risk has been added regarding recruitment and retention of staff within the LGR context, and there are some further changes highlighted from paragraph 9 with the appendices showing full track changes as well as a clean version for ease of reference. So yeah, happy to take any comments, feedback, thank you.
Okay, I'll kick off anyway. When James was here and presented the risk register, we had a risk matrix where we could see how the risk scores were arrived at. This doesn't say that, so we go straight, for example, if we take PR1, just to start with, we go immediately to a high risk and a risk score of 12. Now, I think we should see how that risk score has been arrived at, because obviously it's a function of the likelihood against the impact. So that is a change I would like to see brought into this.
So just to be clear to committee members, the score rating there is the mitigated score. As the chairman says, it's made up of the impact and the likelihood. The full details of that matrix was provided in the policy document, but I take on board the comments that this could be made clearer.
And the other general comment, I've got some particular comments, but general comment is that you put in overview and mitigation, but it's not clear, is this risk score after the mitigation, or what effect does the mitigation have on the risk score?
Again, just for clarity, this score is the mitigated score, but I appreciate, again, it doesn't show you the movement, how much it's being mitigated by.
I think would be useful.
Yeah. But just to reassure committee members, the service plans that feed into this do have that level of detail. So this was trying to make it more streamlined and focused at a more strategic level.
But if you want us to comment on it, provide commentary on it, then I think we need to know how it's been built up. Yes, I see.
Could we not, underneath, say, 12, put 4-3 or 3-4?
Yes.
To keep it simple without making it a major thing.
We can make some
rather than having to do graphs again.
I'm not asking for it to be made into a major item, but are we talking about a high risk because of the likelihood or because of the impact? You know, it could be either. It could be a low likelihood, but a very high impact would give you a risk of 12, or a very high likelihood, but of lower impact would give you a risk of 12.
Under the 12, you just need 4-3 or 3-4.
Yeah, well, whatever, with an okay. With perhaps an explanation at the beginning as to how it arrives at. Okay. Okay, I mean, I'm happy to let someone else speak, but I'm going to go on to, if I may, on to PR2, emergency planning, which has been, for the waterside community, an issue within the past 2 years. We've had 2 actual events and a third a minor event, if you like, over water supply. Now, I do not understand how you get a risk score of 6, which just on likelihood has got to be, in previous experience, has got to be a high likelihood. And the impact on the community was enormous. You know, people were without water for days. So I do not agree with that whatsoever.
So
when you compare that to PR4, business community, business continuity, it suggests that this organisation is more interested in the impact on the organisation than the impact on the community, which I think sends the wrong message altogether.
So just to add a little bit of clarity, the PR2, that was assessed as a 2 likelihood and a 4 impact. But I take on board the feedback.
I mean, when you say a 2 likelihood, did you say?
Yeah, 2 probability, yes, likelihood. Yes.
When it's happened twice within the last 2 years. I would have said it's almost a certainty it's going to happen again.
I'm sure, as previously mentioned, these are live documents which we can take on board the
well,
feedback
then I want that comment
have the
made.
Conversations. And I think it refers back to the earlier comment in the AGS in terms of this getting embedded that serves everybody's purposes. So it's really useful feedback. Okay.
Again, I'm happy for someone else to chip in. Can we go to PR14, which is the waste strategy implementation? I'm not concerned about the risk rating or risk score, but I am a little concerned over the mitigation column, which suggests that you feel, or it is felt, that members should be more broadly engaged than perhaps we are. I don't know whether that is what is meant by that, but I think from other meetings it's clear that members are waiting for guidance as to how to get engaged.
I think the general thrust behind that comment is just members being supportive of this significant change and making sure we're doing all we can to get the right messages across. If greater clarity is required, or I can certainly liaise with the service to get some messaging out to all members.
Okay. And my next comment is PR16, where we've put a high risk rating and a risk score of 12. I think I would like some explanation on that as to why that is so critical when you compare to some of the other risks in this report.
So I think as colleagues may already be aware, the planning system has been fraught with difficulties from an IT perspective for a number of months, and this is the plan to upgrade the system and improve it is on hold at the moment, so hence that's why it's high risk at this stage. Whether it's relative to others, based on your comment, that's a secondary matter, but in this individual instance, it is a high risk.
Okay, well, I feel that perhaps is over-emphasised as a risk, especially when you take account of the mitigation when the current software is going to be maintained for the next 18 months. It doesn't sound to me that it's a particularly high risk. Okay, someone else got any? Yes, Councillor Zhang.
Yes, I mentioned it earlier, and I think it is quite relevant. Again, we've got a PR4, high risk 12, and yet you've got the cavalry are coming, you've got your officer being successfully recruited. You've still got a high risk of 12. I just find that if we are here to look and see these and realise these are live, this doesn't seem very live to me. It's an old report.
If I can just comment on that, I mean, we've been told that the risk score of 12 is after the mitigation. So they're saying even with the officer recruited, they've still got a risk score of 12.
Yeah. It seems,
I think,
it's not very live.
No. Anyway, you've asked for input.
Yeah, there's one other.
I will take that back to the services.
Yeah. The other one I was going to say was, in fact, PR7. I really to have an update. You're saying a process you've got in June will be completed and reviewed by the partnership. Can we have an update? Are they, again, it's staying at 6. Should it be improved on that? You know, we're seeing reports here where there's something is being mitigation, there's something happening, but we're not seeing it reflected in the scoring.
Well, I'm afraid we've been told we are seeing it reflected in the scoring. This risk of 6 on that particular one is after the mitigation.
After the mitigation.
But I think this is where it comes back. If you can have, you know, you've identified a risk, so therefore the risk score, and then the mitigation, and what change does that make, would be a lot clearer.
Absolutely. That transparency would help.
Okay.
Would help members. Yeah.
Okay, thank you. Anybody else? Oh, Councillor Brisson.
Could I just clarify from my own PR16, where you were discussing just now, the high score, is that it's a high score because you're not going to get the system? Because the actual outcome of not having the system doesn't have an awful lot of problems, because the planning is continuing in a good way. So are you saying the score is high because the system's not there, rather than the outcome of the fact the system's not there? That makes sense.
Can I just offer, it might help members on that one, the timeline of 18 months around support for the current system is mentioned. In that time frame, we would also need as a council to procure and implement a new system, and that system's integral to the planning team functioning, its service. So I think one of the reasons for that remaining high is that yes, we have a system at the moment, but whenever that system comes to its end of life, we will need a system to take over from that point and transition. You can't be without a system for a period of time. And with such a complex piece of technology, 18 months is a reasonable time to go ahead and do that piece of work, to bring something new in. So I think hopefully that helps members understand why we've identified as a council that that's still a high risk and something that needs to be closely monitored. It's coming to an end in 18 months, and that piece of work still needs to take place to replace it.
Okay, I'm going to be very cynical here and say the National Park have introduced a new planning system, which, well, for all its faults, seems to work. Is it so difficult for us? No comment, all right.
And I would comment, it's also a regulatory system as well for the Council's environmental health regulatory services, so it's a fair point you've made. I think that as it's articulated under the risk measure and the 18-month for the current software, I think that's the view that's been taken, that it's high risk and needs to be closely monitored.
Okay, thank you. Right. So I think we're asked to provide commentary, which we've done. So I hope those comments will be addressed before it goes to Cabinet. Okay, thank you. Right, we now come to item 15, anti-money laundering policy. Again, Paul. Busy chap.
Thank you, Chair. Yeah, this policy was last reviewed in 21-22, and this update is predominantly presentational, but the main thing to note is the increase in the threshold at which cash payments should be reported. It was previously 4,000, it is now increased to 6,000, and this is due to the potential maximum annual council tax charge that is likely over the next 3-year period should someone wish to pay in cash. This update will be communicated to all relevant staff, and the training module on our LMS system will also be amended to make sure people are aware of the new changes subject to this approval. Thank you.
Thank you. I mean, as far as I can see, the main difference is raising the threshold of cash payments.
Correct, yeah, that's it.
Yeah. Has anyone got any questions or comments on this, or can we support and recommend it? I think so. Okay, support and recommend? Yeah. Yes. Okay, thank you. And then the next one, which was Councillor Brown's pet hobby horse, payment card industry data security standard. Paul.
Well, I'm very grateful to pass over to Naomi Baxter for this one.
Thank you, Chair. Fair enough. Good.
We'll give Paul a break for this. So I'm just bringing an update to you on the Council's implementation of the payment card industry data security standards. So we have made a little bit of progress. We're continuing to engage with the companies that we've outsourced to check that they're still maintaining their PCI compliant status. We're engaging with our staff to make sure that we've got adequate training in place and looking at what systems we can put in place to help improve our security. But I'm happy to take any questions.
Okay, thank you. I think, not just to clarify, I mean, we talk about the current progress and these particular things are outsourced, and I think we're saying we've outsourced the responsibility, so we're not responsible. The last two, I understand that this is where we take information over the phone on someone's payment details, and is that right? Is that's
correct. So there, I can't remember the percentage. There's a 14% failure rate on payments. So every time we try and take an agent-referred payment, there's a 14% chance that that payment will fail. Now, that could be for a vast number of reasons. It might be that the customer's done something wrong their end. They've input an incorrect detail. It might be that they've just hung up the call and given up the payment. It might be that the bank has declined that payment. So there's a huge number of reasons. So for a small proportion of that 14% failure, if we identify that customer as vulnerable or unable to use this system, we may well offer them the chance to give their card details over the telephone. That's monitored. It's only done in when we've tried the other method and it's not worked. But yeah, there is a small instance where people do give their telephone number over the phone. Their card number over the phone. That's never written down. It's never recorded. It's entered directly into the payment system, and we never see it again. But so yeah, that's not compliant, and we would like to implement a system where, so at the moment, when somebody is transferred over to the ARP payment line, it's an end call solution, so that call is hung up and it's basically over to the customer to deal with that payment themselves. There are options which are called mid-call options, which would allow us to stay on the telephone with the customer and talk them through that process, and so advise them and help them to complete the payment without needing to read it out to us over the phone, which is where we would like to see ourselves, but obviously that's a brand new system with costs and implementation involved, so we're not there yet.
Okay, thank you. Any questions from anybody? I think we're just asked to note, so I think we can take it. We've noted it. Thank you very much for that. Okay, so we now come on to Audit Committee work plan, which I'm glad to see for the next meeting, a lot fewer items. Whether it's going to stay that way, I don't know. Anyone got any comments or anything?
May I say something, Chairman?
Yes.
We heard earlier the external auditors are going to be bringing everything forward to November, to the meeting then. Does that influence everybody? Are we all rushing forward for work being completed sooner? Did you get that impression?
Well, they have a drop-dead date, as I understand it, and our meeting Paul better comment on this. Our meeting on the 23rd of January is supposed to receive that final audit report. Is that right?
Exactly. If things go as scheduled, we've got the January meeting and then also the March meeting next year. So it will flow into those meetings, not earlier ones.
I don't think we're rushing.
It won't influence.
No, I don't think so.
They're bringing it forward. I just thought whether it's
Well,
going
I don't think they're specifically bringing it forward. They're saying they're planning to complete a bit earlier than the cut-off. So I don't think we're asking them to work overtime or anything to do it. So. Paul, do you want...
Well, no, exactly. I mean, as part of this backstop, the backstops that were put in place in the recovery phase we're going through, everything is shifting more positively, but not to the extent that we need to concern committee meetings at this stage.
Right. Okay, thank you. I have no other items that are urgent, so I declare the meeting closed. Thank you all very much.